Now, I often talk about private lenders and mortgages, but what I've been asked a lot about is bridging. In today's video, I'm going to break down what it is, the risks involved, the pros and cons, and how you can get a bridging loan online. A common phrase you'll hear me say is your network is your net worth, and the reason why I say that is because of how quickly you can scale a property portfolio utilizing other people's funds. Bridging has got its name because of bridging the gap. So when you get a bridging loan, it's often used for the unique circumstances in property. So for example, it could be speed. So the most common one is in auctions, for example, and I'm going to be breaking down exactly what that looks like, how you can apply it to more in auctions, and I'm going to be showing you a piece of software that I use, Lendlord, to look at bridging and auctions, who also happen to be today's video sponsor. So thank you for that, Lendlord. More on that later. Bridging often is bridging the gap between two types of things. So it could be the speed aspect. So for example, in auctions, when you offer an auction and the hammer goes down, you've exchanged on the property, and usually you've got 28 days in order to complete on that property. The issue is, with a mortgage, it's just very unlikely you're going to be able to do it in that time. And so most people rely on cash. The problem with cash is, of course, it runs out quickly. And so you have this bridge, or bridging, a load of people say bridge it, to bridge between the purchase and the refinance or the sale of the property. So whilst it's used for quick purchases, often auctions or an alternative to cash purchases, it's also used for more unique properties. So for example, there are non-standard construction properties that are perfectly mortgageable, like Wimpy No Fines, for example. If you remember one of the properties that I've bought in Doncaster, we can do a little cutaway to it, and it has a Wimpy No Fines. So that's absolutely fine to get a mortgage, but it needs to have the certificates. It needs to be signed off. And so bridging can be used for that, to bridge it. Let's say you've got the property at a good price, get the certificates, and then refinance. Another one is if there's too much damage to the property. So probate properties, uninhabitable properties, anything that is unique or difficult. So for example, if you don't have a kitchen or running water, you're not going to be able to get a mortgage. Bridging can be used to bridge the gap with those types of properties, which is a great opportunity if you see a property but you don't have the hundreds of thousands sat in your bank account right now. There's a lot of different types of this, but the main two you're going to look at is open contracts and fixed contracts. So an open contract is often you can pay back whenever you want. After usually 6 months, there's no early redemption charges. And early redemption charges, if you pay something back early, you're going to get charged by the lender. And the reason why they do that is they make money when you've got the money, not when they've got the money, right? So it makes sense. So after 6 months, there's no early redemption charges, usually, and you can pay back at any point, usually within a 12-month time frame. Alternatively, a closed bridge or closed bridging contract is when a bridger will lend you the money, but you have a fixed point when you're meant to pay that back. Usually you can't pay it back before, and usually not after. Of course, if you do pay after, it depends on the bridger, but you will carry on paying the rates, and if you annoy them enough, they will penalize you. Which brings me to some of the pros and cons. The pros of bridging is the flexibility. So you're not dealing with a computer says yes, computer says no person who just has to tick boxes. Usually it's somebody on the end of the phone trying to understand what it is, to understand whether they're going to lend you the money or not. The other thing is they've got increased risk appetite. And this is good for a number of reasons. Number one, the computer says yes, no situation, i.e. you've actually got a human being going, okay, look, I'm happy to lend on this. You are slightly higher risk. They might even go to asset-backed lending where you could be defaulted. You could have court county judgments, but they'll still lend on the property because of that understanding. They're also property people a lot of the time. So for example, I bridge out money from time to time as well. But they are people that understand the industry. The other thing is speed. So some bridgers you can actually get in touch with them today and they'll be able to complete in a matter of weeks, or in the case of Lendlord, which I'll show you in a moment, sometimes days. And that's really unique, because imagine going to an auction going, right, I need some money for this. You get in touch with Lendlord as an example, there are other bridges available, and they go, yeah, I'll give you that money, and it's in your account in days, and which is absolutely insane. The speed gives you that power. So bridging is an important and imperative leveraging tool to scaling. The final thing worth noting is the loan to value. So often they're more flexible on that. With a majority, you still need to have some hurt money in. You know, you might want to put in 10, 15%. But a lot of them, you don't need the 25% that a lot of people are requiring. And in some cases, if you've got a really great deal, they'll actually do a loan to value rather than a loan to purchase. Gonna pause there because that's quite important. Loan to value is often what mortgage companies will call what their lending is. Let's say you buy a £100,000 house and they give you 75% loan to value, they'll give you 75,000. But is it really loan to value? No, a lot of the time it's actually loan to purchase price. So for example, you are purchasing it at 100,000 and then getting 75%. But what if it's worth 120,000? If it's 75% loan to value, they should give you 90 grand, right? What does it matter that you're buying it at 100? No, it doesn't work like that. Whereas with bridging, some bridgers will genuinely give you a loan to value based on what a RICS surveyor has said the property is worth, not what you're purchasing at. A massive plus if you want to make your money go further. But it's not all good news. There are some downsides. So one of the biggest downsides is costings. So bridging is not cheap, but it's often cheaper than private money. So when you're lending private money or borrowing private money, the costs can rack up. The difference is, obviously with a bridger, it's a little bit more professional, it's a little bit more structured, and obviously you can rely on it. But it is expensive, it is pricey. So some lenders can go upwards of 1.5% a month. And you know, that's pretty hefty. Now that's fine if it's really quick money, but it can get bloody expensive. So again, Lendlord, the thing that I love about it is the competitive rates on there. So they bring it all together and they actually negotiate it on your behalf, which is very nice, but it's still quite expensive. When you compare it to a mortgage, which might be 3%, you might pay, let's say, up to 1% a month if you can get some good bridging. The other thing is the increased risk. So often when you're analysing your projects, you really need to factor in going over time, going over budget. What if there's a down valuation? Because the majority of people, when you're buying something, you are relying on a refinance and you are relying on a sale. But what if the sale doesn't come through? What if when you're refinancing or remortgaging the property, it down values by 10,000? Well, that's going to directly impact how much money you've got back. So how do you protect against this? You need to have some cash lay in there for that protection. The only other con I can think of is something called a bridge to let product. So a bridge to let product is when you go to the same lender for bridging as you are the remortgage. And what they do is they say, yeah, we think it will be worth 100,000 at the end, and we're happy to lend to you on that basis. The difference is that actually, if it's too long between the bridge and the refinance to the buy-to-let product, then they will insist on getting a new valuation. The problem is, if it's too long between the bridge product and the buy-to-let product, the let part of that, they will insist on getting a new valuation. And I've heard stories of them down valuing at the end. Now, the issue with that is you're getting their mortgage product to complete and refi on their bridging product, but now they're not giving you enough over here. And I've seen people be 5 grand short and be stuck with it. So my recommendation, if you're going to take on bridging, is don't take on bridging fully relying on that exit. Have some money. So I would use it as a situation to make your money go further, I would never use bridging because I don't have any money. Okay, I still use bridging, I use Lendlord, and when I'm getting that bridging, I will never rely fully on that money. It's just to make my money go further so I can buy more and more and more and build the portfolio up. So let's jump into Lendlord now so I can show you exactly what you'd be looking at and how you can utilize it. And by the way, there's a link below to Lendlord. If you click on there, it's completely free, by the way, to get all of this. And you'll see some, I've done some other videos on Lendlord because it's a pretty exceptional software. And what I've noticed more and more recently with them new additions, which I'll show you, is it's becoming more of an all-in-one service. So let's jump in now so I can just show you around. Okay, so we jumped into Lendlord now, and this is one of my accounts. And this is the one that I use for YouTube, and it's got 10 of my properties on there. So you can see my portfolio section. And again, I'm not going to go through all of this, but you would have seen me go through profit and loss, the deal analyzer and stuff, because it's just it's insane. So the things that I want to show you today, very briefly, this isn't a video about this, but auctions here. This is exactly the sort of thing you can use it for, and it becomes so powerful. So if I go to Leeds, which is one of my main areas, here's what I love. So there's 13 lots in Leeds, and you can see who it's on for. So most of them are going to be I'm Sold, Patsons and Allsop, which again, you can see here, Allsop, Patson, I am sold, I am sold, I am sold, I am sold. So it's giving you a good idea already. But what's really cool is it extrapolates these from all of the portals. So it's nothing you can't find, this section anyway, because you can find that on Rightmove, Zoopla, whatever, but it brings it all in one place. Here's the thing that I absolutely love, the second section and the third section. So first of all, this one here, it automatically gives you a rental analysis. And this is their computer software, the algorithms, extrapolating this based on rental comparables in the area. So like for like, 2-bed terrace, 2-bed terrace. Now, obviously the algorithms can't tell exactly, is this refurbishment or not? They can base it on the words. So if it says newly refurbished, that's the giveaway. But look here. That extrapolates it and gives the net annual cash flow. That is not the rental, gross rental, that is net. So it factors in a mortgage, it factors in management, everything like that. It also factors in long-term growth as well. So this is often based on 10 years, this information here, but it's showing over a 10-year period, it can give a long-term ROI, return on investment, of 117.16. Now, would I ever rely on computer-generated algorithms to make a purchase on? No, but it's like for like information, and that's the important thing, is it might be wrong by £50 a month, but everything will be wrong. Or £25 a month. Now it gets more and more accurate, these computers, which is amazing with the information. But the point is, it's a comparison metric. So again, if you look at these ones, they're very similar, which kind of makes sense. You know, you've got very similar prices. Whereas if we go down to here, 113.48, 115.61. And then it's got the cash on cash return, which is how much money is invested. Okay, which is pretty good. This is on the first year. And then you've got the internal rate of return as well. So these are estimations, but it gives you a really quick snapshot. You've also got flip analysis there. So if you click on each one, you can see gross profit of 21 grand. Well, net profit's more important. 19 grand, 17 grand, 17,000, 20,000, 35,000. Now, naturally, what you'd want to do is if you want to click on these, you can see the lot page, you can get decision in principle, like we'll go back to that in a second. But you can do this as a comparison metric. And then what I do is put them in. Now, the third thing is the really cool thing, and it's one of the only times I've actually seen this on a piece of software. You can actually click on that and get a decision in principle. So what I do is, I'll link back to that in a second. You just click on this. It gives you an indicative quote on here. So the loan value is 73,000 based on 93,000. So I'd need to put in 20 grand, right? There's an arrangement fee of 1,400 and monthly interest of 0.69 to 0.83. The reason that's going to be a range is it's going to depend on your credit history, your experience, etc. So I've clicked obtain, and you can go through this all the way. So for example, it's an auction purchase. Right, is there security? Yes, because it's an auction, they'll get first charge. What's the estimated purchase price? Let's say 100,000 to make it easy. So you're currently going to get 0.69. How much do you wish to borrow? I'm probably going to borrow, let's say 75 of that. So then it's asking for some personal details to go in. And what I'm going to do now is just flick through the remaining questions, which is about 10 more. Okay, so that took me about 45 seconds to a minute to go in there. And, you know, again, this is indicative terms. Obviously, they'll need to do a valuation. But what you can see on this property is they're going to give me 75 grand, indicative terms. They're going to charge me 0.81% per month. So is that the cheapest finance in the world? No. Mortgage will be a lot cheaper. But as I said, this is about the speed. And for me, the certainty is very rare in my experience that they would give indicative terms and change it completely. So it's going to cost me a couple of grand in terms of the valuation fee, etc. But after that, I can choose to proceed with the application or not. And what this does is gives me a really well-rounded idea of what I can do. Now, the best benefit is the fact that the money is going to be readily available. So now, let's say I go through and say, hey, look, I'm going to want 3 of these or up to 3. Are you happy with that? They will go, yes, I am. They'll then go into the auction, say I've got an auction next week, and I'll be able to offer on 3 properties, and say they get accepted, then I know the cash is there ready to go. So whenever you're looking for bridging, it's about the speed and the certainty. So if I go back here and then click on services at the bottom, here's where it is. Now you've got the brokers that they get in there, and they're real complex type brokers. So any issues and they're really aggressive with what they're getting. But it's these direct lenders. And what I love is you've got some real big ones like the Mortgage Works and Selena Finance, which is amazing. But really what I'm interested in is the Lendlord finance. So if you go on Lendlord bridging finance, not only do you get preferential rates, and if you set up a login, which again is completely free, they give you a discount on each purchase that you make. So each one you're going to get a discount by being a member of Lendlord for free. But it's more the timescales. Now, this is the most important thing, especially in today's market. Everything is about speed. And as you can see, it's completion in 5 working days. Now, obviously, that's 5 working days of when you get the full information. But this really adds a level of power and certainty when you're putting in your offers. So as I said, there are downsides of getting bridging. However, if you end up utilizing bridging for the speed, the awkward purchases, uninhabitable properties, then this is the best way to do it in my opinion. So I want to say a massive thank you to Lendlord for sponsoring today's videos. If you watch my other reviews of Lendlord, I give a completely unbiased review. There's definitely bits that can improve on this, more lenders that are coming in, the finance side of things. You know, the fact they're sponsoring this isn't going to impact my opinion on it, but I do think it's a really strong piece of software that is getting better and better every single time I go on it. So as I said, it's completely free. If you want to try it out, and I really suggest you do, there's a link in the description below. Make sure you sign up on that. Put in your details, log in, and just check it out. If you don't like it, you don't like it. But I genuinely feel, and most people that I've given me feedback absolutely love it. From the analyzers, the dashboard, tracking the tenants, tracking the payments, the analyzer is the best analyzer I've ever seen on genuinely, like I've ever seen on a piece of software. And the fact that now Lendlord are bridging directly, so you can cut out a huge amount of costs. More importantly, you get increased value. Click the link below. Hopefully you got massive value from this video as well. If you did, hit the like button. And if you want to find out more about property investment and you're new to the channel, make sure to hit the subscribe button and the notification bell, and I'll see you in the next video.